A mixed bag amid global uncertainty. Investors around the globe woke up to a somewhat mixed trading day on May 7, 2025. The world's leading indexes exhibited a blend of green and red as market participants continued to grapple with the uncertainty tied to geopolitical tensions and economic recovery post-pandemic. In the United States, the S&P 500, Dow Jones, Russell 2000, and NYSE Composite were all in positive territory, gaining 0.43%, 0.7%, 0.27%, and 0.44% respectively. The upward momentum in these indexes could be attributed to positive economic data, including lower unemployment rates and robust corporate earnings reports that have continually signaled a healthy economic recovery. However, the VIX Volatility Index, often referred to as the fear gauge of Wall Street, dipped by 4.2%, suggesting that investors remain cautious due to the ongoing geopolitical tensions and the looming threat of inflation. In Europe, the major indexes including FTSE 100, DAX, and CAC 40 were all trading in the red. Despite some positive earnings reports, investors seem to be concerned about the increasing geopolitical risks in the region, especially with the escalating tensions between Russia and Ukraine. Asian markets showed mixed sentiments as well. The Nikkei 225 slightly dipped by 0.12%, while the Hang Seng and Kospi indexes saw marginal gains of 0.13% and 0.55% respectively. The Shanghai index stood out with a solid gain of 0.8%, reflecting optimism about China's economic prospects. Commodity markets demonstrated varied performance as well. Gold and silver prices fell by 0.92% and 1.69% respectively, as investors sought refuge in riskier assets. Crude oil WTI and Brent oil also declined by 1.76% and 1.72% respectively, due to concerns over future demand. However, natural gas and wheat saw considerable gains, reflecting the ongoing supply constraints. In the ETF sector, technology, healthcare, and financials outperformed, while materials and real estate underperformed. This could be a reflection of investors' confidence in the technology sector's growth potential and a shift towards defensive stocks like healthcare and financials. Finally, in the U.S. stock market, Apple stock fell by 1.14%, while Microsoft barely saw any change. Amazon, on the other hand, gained 2.0% following an upbeat earnings report. Google parent Alphabet's shares tumbled by a significant 7.26% following antitrust concerns. Overall, the market snapshot for May 7, 2025 paints a picture of cautious optimism mixed with uncertainty. The tug-of-war between positive economic recovery signs and geopolitical tensions continues to shape investor sentiment and market movements. As we dive deeper into this analysis, we will examine the key shifts, sector performances, and individual stock movements that define the trading day. Global market overview. This news is brought to you by Preeti Capital. As we look at the overall global market performance on 7th May 2025, we see a mixed bag of gains and losses. The majority of the indexes saw an upward trend, with S&P 500, Dow Jones, and Nasdaq Composite all recording gains of 0.43%, 0.7%, and 0.27% respectively. On the other hand, European markets faced a bit of a struggle as FTSE 100, DAX, and CAC 40 all reported losses. Notably, the DAX dropped by 0.58%, while the FTSE 100 saw a decrease of 0.44%. Asia's Nikkei 225 also reported a slight drop of 0.114%, while the Hang Seng and the Shanghai market rose by 0.13% and 0.8% respectively. In the commodities market, the volatile nature of the market was evident, with gold and silver recording losses of 0.92% and 1.69% respectively. Crude oil WTI and Brent oil also declined by 1.76% and 1.72% respectively. On the brighter side, natural gas and wheat bucked the trend and saw increases of 4.62% and 2.84% respectively, indicating a positive dynamic in this sector. ETFs also showed mixed trends. The technology ETF, XLK, saw an increase of 0.97%, followed by a 0.74% rise in the healthcare ETF, XLV. However, the materials ETF, XLB, saw a decrease of 0.57%, and the real estate ETF, XLRE, fell by a slight 0.02%. In the US, Apple stocks saw a decline of 1.14%, aligning with the global trend of tech stocks struggling amidst rising inflation concerns. Meanwhile, Amazon stocks rose by 2%, indicating the resilience of the e-commerce market in the face of current market conditions. Other tech stocks such as Nvidia and Meta also saw increases of 3.1% and 1.62% respectively. In conclusion, this day of trading reflected a global market trying to balance itself amidst fluctuating conditions. With tech stocks showing mixed trends and commodities displaying a volatile nature, it seems that investors are still gauging their strategies. It's an intricate dance between risk and reward, and only time will tell which sectors emerge victorious in these challenging conditions. The bullish sentiment in tech stocks. This news is brought to you by Preeti Capital. The technology sector emerged as a clear winner in the latest market snapshot, with many tech ETFs and stocks recording considerable gains. The technology ETF, XLK, saw a positive surge of 0.97%, indicating a bullish sentiment towards tech stocks. Tech giants Apple and Microsoft had slightly varying fortunes, with the former witnessing a minor dip of 1.14%, while the latter remained almost steady with a minuscule rise of 0.01%. However, Amazon, the e-commerce behemoth, saw a healthy growth of 2%, indicating a positive sentiment in the e-commerce space. In contrast, Google's parent company Alphabet, Google, faced a significant drop of 7.26%, indicating a bearish sentiment towards the stock. This could be attributed to a variety of factors, including the company's recent earnings report or market speculation. On the other hand, Meta Platforms, Meta, formerly known as Facebook, saw a rise of 1.62%, suggesting investor confidence in the company's rebranding and new strategic direction towards the metaverse. The semiconductor industry also showed a favorable market sentiment. Nvidia Corporation, NVDA, a leading player in the GPU market, saw its stock rise by 3.1%. This positive sentiment could be linked to the growing demand for GPUs in various sectors, including gaming, cryptocurrency mining, and artificial intelligence. On similar lines, Advanced Micro Devices, AMD, also saw a rise of 1.76% in its stock value.
The shift in commodity market. The commodities market presented a mixed bag of results. Precious metals, gold and silver, saw a decrease in their values by 0.92% and 1.69% respectively. This decrease could be attributed to the strengthening of the dollar or a shift in investor attention towards riskier assets like stocks. On the other hand, energy commodities had a day of decline. Crude oil WTI and Brent oil dipped by 1.76% and 1.72% respectively. This could be due to factors such as the ongoing negotiations on the Iran nuclear deal, which might increase global oil supply, or the market's response to changing demand patterns in the wake of the pandemic. However, natural gas stood as an exception in the energy sector, with a substantial increase of 4.62%. This rise could be attributed to the increased demand for natural gas amidst colder weather forecasts or fluctuations in supply levels. The agricultural commodities sector saw a positive trend, with corn and soybeans recording a rise of 0.45% and 0.43% respectively. Wheat also saw a considerable increase in its value by 2.84%, which could be due to factors like changing weather patterns impacting the crop yield or increased demand in the global market. The market snapshot of May 7, 2025, thus presents an interesting mix of ups and downs across various sectors. While tech stocks and agricultural commodities enjoyed a largely positive day, precious metals and energy commodities faced a downward trend. As always, these market dynamics continue to be influenced by a myriad of factors, ranging from company-specific news to broader economic indicators. Market analysis, tech stocks, take center stage amidst volatility. This news is brought to you by Preeti Capital. In the stock market today, the technology sector took center stage with several significant movers. Apple, One of the most prominent tech stocks saw a slight decrease in its stock price. This dip came as a surprise to some investors who expected better performance due to the company's strong quarterly earnings report released recently. However, Amazon bucked the trend, with its stock price increasing by 2%. The e-commerce giant has been on a roll lately, due in part to the surge in online shopping amid the pandemic. The company's dominance in the e-commerce sector, along with its expanding cloud computing and advertising businesses, continue to drive its stock price higher. Google's parent company, Alphabet, had a rough day, with its stock price plunging by over 7%. The sharp decline was triggered by the company's disappointing quarterly earnings report, which revealed slowing advertising revenue growth. The report raised concerns about the company's future prospects, leading to a sell-off by investors. In contrast, Nvidia, a leading player in the semiconductor industry, saw its share price surge by over 3%. The company has been benefiting from the strong demand for its graphics processing units, GPUs, which are used in gaming, data centers, and artificial intelligence applications. The ongoing global chip shortage has also worked in Nvidia's favor, leading to higher prices for its products. In the auto sector, Tesla's stock price increased modestly. The electric vehicle maker has been dealing with several challenges, including supply chain issues and regulatory scrutiny in several countries. However, the company's strong brand and leadership position in the electric vehicle market continue to attract investors. In the financial sector, some notable movements were witnessed. Berkshire Hathaway's stock price increased by over 1%, reflecting the conglomerate's strong performance across its various businesses. On the other hand, JP Morgan Chase's stock price remained nearly flat, despite the bank's strong financial performance. In the healthcare sector, Johnson & Johnson's stock price increased by nearly 2%. The healthcare giant has been doing well, thanks to the strong performance of its pharmaceutical business and the ongoing demand for its COVID-19 vaccine. In the commodities market, natural gas prices rose by over 4%, while gold and silver prices declined. The increase in natural gas prices was driven by rising demand due to colder weather in several parts of the US. Meanwhile, gold and silver prices fell due to a strengthening US dollar. In the ETF market, the Technology Select Sector SPDR fund saw its price increase by nearly 1%. The fund tracks the performance of technology companies in the S&P 500, and its price movement reflects the overall performance of the tech sector. As the trading day concluded, it was evident that the tech sector was in the spotlight, with several major movers. Despite the mixed performance, the sector remains a key driving force in the market, given its significant weight in major indexes. Looking ahead, market participants will be closely monitoring the developments in the tech sector, along with any potential macroeconomic triggers that could influence market direction. Assessing commodity performance and its market implications. This news is brought to you by Preeti Capital. Amid the flurry of market activity, commodities have experienced notable shifts that could have significant implications for investors and the broader global economy. Gold, a classic safe haven asset, saw a decline of 0.92%, signaling a potential shift in investor sentiment. As the markets rise, it indicates that investors may be moving away from safe assets and towards more risky investments. However, it's important to keep in mind that gold's value also tends to be inversely correlated with the US dollar, meaning that strengthening of the dollar could also be a contributing factor to the dip in gold prices. Silver faced a more substantial drop of 1.69%, while crude oil, WTI, and Brent oil both saw decreases of 1.76% and 1.72% respectively. The slump in oil prices could be attributed to a number of factors, including concerns about demand in the wake of renewed COVID-19 outbreaks in certain regions, as well as the potential for increased supply following the OPEC Plus decision to gradually increase production. In contrast, Natural gas saw a significant increase of 4.62%, potentially driven by the anticipation of increased demand as the Northern Hemisphere moves into the summer months. Copper, a key industrial metal, experienced a dip of 2.32%, which could signal concerns about the health of the global manufacturing sector, as copper is often seen as a barometer for industrial activity. Agricultural commodities also witnessed mixed performance. Corn and soybeans both saw slight increases of 0.45% and 0.43% respectively, while wheat surged by an impressive 2.84%. These movements could be influenced by a multitude of factors, including weather patterns, export demand, and supply chain disruptions. Shifting focus to exchange-traded funds, ETFs, the technology ETF saw an increase of 0.97%, indicating a positive investor sentiment towards the technology sector. The healthcare and financials ETFs also saw increases of 0.74% and 0.59% respectively. This suggests a broad-based optimism in the market, as investors are leaning into sectors that are often associated with economic growth. On the other hand, the real estate ETF witnessed a marginal decrease of 0.02%, hinting at some investor caution about the property market in the current economic environment. The consumer staples ETF saw a modest increase of 0.15%, potentially indicating that investors are hedging their bets by maintaining some exposure to more defensive sectors. As the week progresses, it will be critical to monitor these trends and their potential implications for various sectors and asset classes. The current market movements underline the importance of maintaining a diversified investment portfolio, capable of weathering the inevitable ebbs and flows of the global economy. As always, investors are advised to carefully consider their financial goals, risk tolerance, and time horizon before making any significant investment decisions. Zhang's emerging trends in commodity markets. This news is brought to you by Preeti Capital. The commodity market experienced significant shifts on the trading day of 2025-05-07. Influenced by various global events, the prices of key commodities, including gold, silver, crude oil, and natural gas, witnessed notable changes, giving a clear picture of the forces driving the global economy. The price of gold, a safe haven asset traditionally used by investors to hedge against financial market risks, declined by 0.92% to 3379.99. This decrease suggests a possible increase in risk-taking behavior among investors, as they may be moving their funds from gold to more risk-associated assets, such as equities. It also signals a potential strengthening of the US dollar, as the price of gold usually moves inversely to the dollar. Silver, closely linked to industrial activities due to its extensive use in various sectors, saw a more significant fall of 1.69% to $32.55. This could possibly indicate a slowdown in industrial activities, which may be related to the recent macroeconomic uncertainties and disruptions in supply chains. When it comes to the energy sector, both crude oil WTI and Brent oil experienced a significant drop in prices by 1.76% and 1.72%, respectively. The decline in oil prices could be linked to the increasing global efforts towards renewable energy and the reduction of carbon footprints. It also suggests a potential excess in supply or a decrease in demand for oil. In contrast, natural gas witnessed a considerable rise of 4.62% to $3.63. Increasing demand due to the transition to cleaner energy sources and seasonal factors could explain this price hike. Furthermore, geopolitical tensions in gas-producing regions and stringent environmental regulations could also be driving the prices of natural gas higher. On the agriculture front, corn and soybeans saw a marginal increase in prices, signaling a potential rise in demand or a possible constraint in supply. Rising global population and changes in dietary preferences could be contributing factors to this increase. In conclusion, the commodity market trends of 2025-05-07 reveal a dynamic and diverse picture of the global economy. From the risk appetite of investors to the state of industrial activities, from energy transition to changing dietary habits, these trends offer crucial insights into the forces shaping our world. As we move forward, it will be interesting to see how these trends evolve and guide our financial decisions. In the next section, we will delve deeper into the performance of key ETFs, offering an analysis of sector-specific trends and their implications for investors. This news is brought to you by Preeti Capital, or Commodities and ETFs' Impact on the Market. The market saw a shift in the commodities sector, where gold and silver both experienced a drop, with gold falling by 0.92% and silver by 1.69%. This points to a potential decrease in demand for these precious metals, often seen as safe havens in times of economic uncertainty. The fall in price could be indicative of investors' increased confidence in the market, leading them to shift their investments from these traditionally safe assets to potentially more lucrative options. The oil market also experienced a downturn, with crude oil and Brent oil falling by 1.76% and 1.72% respectively. This decline in oil prices could be a result of the increasing push towards renewable energy sources and a decrease in global dependence on oil. Despite the fall in most energy commodities, natural gas saw an increase of 4.62%, possibly due to a surge in demand or a reduction in supply. In the ETF sector, technology, healthcare, and financials saw an uptick, with technology leading with a 0.97% increase. This could be attributed to the increasing digitization of various industries and the ongoing digital transformation trend. The rising demand for technological solutions in various sectors, from healthcare to finance, is driving the upward trend in the technology ETF. The healthcare and financials ETFs also saw a rise, indicating a solid performance in these sectors. Conversely, materials and real estate ETFs experienced a slump. The drop in materials ETF could be a result of the falling prices in the commodities market, especially with the drop in gold and silver prices. The real estate ETF also saw a slight decrease, which could be due to market corrections after a significant period of growth in the real estate market. The performance of ETFs is often a good indicator of the health of their respective sectors. The growth in technology, healthcare, and financials ETFs suggests that these sectors are performing well and are likely to continue to do so in the near future. On the other hand, the slump in materials and real estate ETFs could be a sign of potential challenges these sectors might face. On the whole, the commodities and ETFs market snapshot reveals a mixed bag of performances across various sectors. While some sectors, such as technology, healthcare, and financials, are showing promising growth, others like materials and real estate might have some hurdles to overcome. As always, investors are advised to keep a close eye on market trends and make informed decisions based on thorough research and analysis. Market outlook and future projections. This news is brought to you by Preeti Capital. As we conclude our in-depth market snapshot, it's essential to put the day's data into perspective and give a sense of what the future might hold. The financial markets are inherently unpredictable, but by examining trends and considering a variety of factors, we can offer some educated projections. Starting with the indexes, the S&P 500, Nasdaq Composite, and Dow Jones all showed gains, which indicates a healthy appetite for risk among investors. The VIX volatility also dropped, further supporting this observation. However, European markets, represented by FTSE 100, DAX, and CAC 40, experienced declines, perhaps reflecting concerns about global economic stability. In the commodities section, gold and silver both decreased, suggesting that investors are moving away from traditional safe haven assets. Crude oil WTI and Brent oil also saw declines, which could be due to expectations of increased supply or decreased demand in the global market. The rise in natural gas and corn might be a result of seasonal factors or supply chain disruptions. Looking at ETFs, technology, healthcare, and financials all posted gains, implying confidence in these sectors. However, Materials and real estate saw slight decreases, indicating potential concerns about these industries' future performance. In the US stocks section, a mixed picture emerges. While companies like Amazon, Meta, and Nvidia saw significant gains, others like Apple, Google, and United Health Group experienced losses. This variability underscores the importance of diversification in investment portfolios. Moving forward, several factors could influence market trends. The ongoing global pandemic continues to inject uncertainty into markets. Any changes in the disease's trajectory, such as the emergence of new variants or significant progress in vaccination campaigns, could impact investor sentiment and market performance. Additionally, geopolitical tensions, particularly between major economies, can affect markets. Investors will be closely watching the situations in Ukraine, Taiwan, and other hotspots for any developments that could trigger market volatility. Monetary policy is another key factor. Central banks around the world, including the Federal Reserve, are facing the delicate task of navigating the post-pandemic economic recovery. Their decisions on interest rates and other policy tools will have a significant impact on financial markets. In conclusion, while the market snapshot for the day shows a generally positive picture, the future remains uncertain. Investors should stay informed about the latest developments and be prepared to adjust their strategies as needed. However, it's also important to maintain a long-term perspective and not overreact to short-term market fluctuations. Despite the challenges, opportunities for growth and profit exist for those who are patient, diligent, and strategic in their investment approach.